Welcome to the African Allocator Podcast. I'm your host, Chipo Muwowo. My guest today is Dave Uduanu, CEO of Access ARM Pensions, one of Nigeria's largest pension fund administrators. Welcome to the podcast, sir. Great to see you.
Thank you, Chipo.
Now, I normally ask my guests the same first question. How did you get into the investment industry? Just briefly tell me a little bit about your journey.
Okay, thank you. So I started out about more than 20 years ago in the investment industry. But before that, I spent about 10 years working in accounting, in auditing and consulting. I studied engineering in university, and I worked right after university. I joined Ernst & Young in Lagos, where I worked as an auditor, and I trained as a chartered accountant. And then I joined a consulting firm where I spent 10 years doing advisory work. Along the way, I did my CFA exams and became a charter holder. And at that point, I decided to pivot into the investment industry. I left consulting to join a life insurance business where I was managing their assets and working as a CFO. And from there, I joined the pension industry when it started, about 18 years ago. So that's my journey.
That's great. Thank you. Currently, you're CEO of Access ARM Pensions. I'd love to hear more about the organization. It was formed from a merger. So tell me more about that, please.
So Access ARM is a journey that started, like I said, about 15 years ago. I used to run a smaller pension fund in the company, and in 2016, I partnered with Actis, the private equity firm, UK private equity firm, to invest in what was then Sigma Pension. It was a management buyout, and I joined the team as the CEO. And Actis, being private equity, after 5 years, decided to exit, as with typical of private equity firms, and they sold their controlling stake to Access Holdings. Access Holdings is the largest financial services company in Nigeria, and Access Holdings had, decided to invest in the pension industry, and I worked with the CEO at that time and co-founder to develop a buy and build strategy where we went on a journey to acquire pension funds where we're strategically decided to be one of the top 2 pension funds in Nigeria. At that point, Sigma was number 7, and in the space of 2 years, we did a M&A with 2 other pension funds, First Guarantee Pensions and ARM Pensions. And this led to the creation of Access ARM, which is the second largest pension fund administrator in Nigeria. We manage, about 3.5 trillion naira, just over $2 billion or $2.5 billion.
Mm-hmm. Tell me more about your asset allocation strategy. So what typically, what are you trying to achieve? How do you go about that?
So the mandate of pensions is to deliver real returns to contributors that allows them to finance their retirement when they leave paid employment. And so that broad allocation strategy, that broad mandate drives our allocation strategy. One of the asset classes that is most dominant and very deep in Nigeria is fixed income, and most pension funds will typically hold about 60% of their assets in fixed income securities. Fixed income ranges from government bonds, typically, and state government bonds, both on the long-term and short-term end of the market. The other assets that is, very popular in Nigeria, which we tend to hold a lot, is, corporate bonds, which is still bonds, but a bit riskier now along the yield curve. And then we have allocations in equities and money market instruments. So by way of asset allocation, we've got about 60% in government bonds, about 10% in equities, another 15% in corporate bonds, and 5% in alternative investments, which includes the whole gamut of private equity, infrastructure, real estate, and private market investments.
Mm-hmm. How does an organization like yours strike a balance between meeting their obligations to contributors and, managing investments in, some, increasingly illiquid asset classes. Obviously, that's still a small proportion of the overall allocation. But just talk to me about that, that balance between trying to grow returns for the fund and meeting obligations and managing risk and that kind of thing.
So we're in a fortunate place where liquidity in Nigeria, gives you very good returns. And the liquid assets in Nigeria tend to be money market deposits with banks, certificates of deposits, commercial papers, and treasury bills. And you can get anywhere between 15 to 25% in these securities. And so we don't really have a challenge with managing that, trade-off between liquidity and returns. As you go up the returns ladder, you start to invest more in equities and corporate bonds. At each point in time, what about 20% of our funds in liquid securities, because we are paying pensions on a regular basis, on a daily basis, we are paying pensions for our retiring, and we have to pay them their pensions. But we have a very liquid portfolio, which is typically made up of, alternative investment, like I said, about 5%. But, increasingly that liquid investment portfolio, it's, we're looking to increase it to maybe about 10%. And that's because we also have a very young population. So people are joining the workforce every day. We're receiving pensions on a monthly basis. And so liquidity management is not really a challenge for us, particularly because of the size of our pension funds.
Mm-hmm, mm-hmm. What's the particular attraction of the alternative space? You spoke about, wanting to increase your allocation to that from 5 to 10. What's the particular draw? Are returns significantly higher than in other asset classes? Well,
the theory and in investment is that illiquidity comes with a premium, so a liquidity premium is better harvested in the alternative space using a closed fund that allows the fund manager to invest over a 10-year period, and it's stable and patient enough to deliver superior returns. So private equity and alternative investment would typically generate higher returns than either liquid or listed equities. That's one reason why we're looking at doing that. The other reason is the impact it creates. Private equity is direct investment in companies or infrastructure or in housing, and these are the things that affect everybody in the country. It creates jobs and it leads to higher economic, GDP growth rate. So it's a question of looking for returns, but also creating impact, because as you know, in Africa, there's a huge deficit in infrastructure financing, in SME financing, and in housing financing. So that is why we're looking to invest more in alternative investment, particularly in infrastructure and housing, and financing growing businesses.
Mm-hmm, mm-hmm. Just to zoom in out a bit now, what are some notable trends taking place within the Nigerian pensions industry?
I think the first thing is the move to more alternative investments. Is a conscious effort of the industry, the regulator and players to increase the allocation from 5 to 10%, and to use that allocation. That's the first thing. The second thing is a DC market, and in terms of the formal sector, a lot of the formal sector companies are already compliant with the Act. And so the other big trend is, if you know Nigeria very well, the informal sector is very large. It's about 80% of the workforce in the informal sector. So there's a big move to launch micro pension plans and informal sector plans for the people that work for themselves. Mm-hmm. That population is not covered at all. The other big move is around, consolidation. The industry is fragmented. You have about 25 players, and the top 5 players maybe control about 70-80% of the market. So there's a move towards consolidation and the race to create what will be the dominant, top 5 players over a longer period of time. And I think the last, I would say, is a lot of investor interest. Private equity investors, strategics, family offices are all interested in making investment in Nigerian pension fund administrators. If you know how the industry is organized, the PFAs, as they are called, are actually private companies. They are asset management companies. And, so you can invest in a pension fund administrator. They are very good investment. They provide stable returns, and the market is growing at about 20% per annum. That far outstrips the economic growth rate, and, it means that if you just compound it over time in 5 or 10 years, the market currently is about, 24 trillion naira. You may get up to, 50 trillion naira in 3 years, and possibly up to 100 trillion naira in another 6 years. So it's a huge market, it's growing, it's a young population, and it's very attractive to long-term investors, be they private equity funds, family offices, strategics, and, insurance companies.
So the industry is growing quite rapidly by the sounds of it. But what have been some major challenges that the industry has faced, and particularly I'm thinking around just pensions adoption amongst Nigerians in general?
So I think the big problem is, one is, ability to deliver real returns. If you go back 10 years ago, the industry was delivering real returns because inflation at that time was around, 12%, or even there was a time inflation came down to 9%, and industry was making about 13% returns. Today, inflation has gone up, largely because of the monetary policy of the central bank to stabilize the currency. So inflation went as high as 30% last year, but it's moderated down to 22%. So one of the big problems in the last 3 years is ability to deliver real returns, which is inflation plus. The industry have struggled to do that. And we hope that this year, as inflation moderates downwards to maybe sub 20%, we'll be able to begin to deliver real returns. The second point is the point I made earlier, that even though the industry is growing, adoption is reducing because there's not a lot of workers in the formal sector in Nigeria. A lot of the workers are in the informal sector, and the pension scheme is a creation of government act, which makes it compulsory for everybody who works in the private and public sector to have a pension account. For those in the private sector, there are there's no such compulsion, and therefore the adoption rate is less than 10% of the population. The covered population is less than 10%, and in terms of pension asset to GDP is, also less than 10%. In countries like, Chile and Mexico, you have as high as 60% pension to GDP. And in South Africa, you have, just about that, So coverage is still low, penetration is still low, and that gives credence to the fact that it's an industry that is primed for growth and, attractive. The other problem is just ability to find suitable investment. The capital market is not as deep, and, it's not as liquid. So the Nigerian stock market is still below 100% of GDP, unlike other markets, and a lot of the more attractive companies in Nigeria are not listed on the market. So the pension fund also find it challenging to find attractive investment in the equity space and the private equity space. That is a big challenge.
How does the Nigerian pensions industry compare to other African markets? So in terms of growth, the challenges being faced, what aspects are unique to Nigeria? What aspects are sort of more general and applicable to other markets?
Well, I think in Africa, Nigerian pension fund is probably the second largest after South Africa, albeit a smaller size. South African pension fund, it's probably about $300 billion, and Nigeria in dollar terms less than $20 billion. One of the big problems we face is naira devaluation, the local currency. So there's a joke that every time you make money in naira and you think your pension fund increasing, then when naira devalues and it comes back to the same thing as in dollar terms. So if you hold absent naira devaluation, the pension fund would have been close to if you use constant Naira terms in 2015, it could have been close to $100 billion. But it's what it is because of devaluation. In terms of growth, it's still one of the fastest growing. The South African market is a very matured market. It's not growing as fast. The Nigerian pension market is still one of the fastest growing. In terms of adoption, it's low, like I said, but it's typical of other markets like Kenya, Ghana and co. And in terms of the type of pension scheme we run, a lot of African markets run DB schemes, which are financed off balance sheet of government and companies. And these schemes are very, new. I think the only other country that is running this scheme in a modified way is Ghana. All other African countries are run, I think, in the main run DB schemes.
Mm-hmm. Mm-hmm. Just to wrap things up, a final question. As you look ahead to the next 12, 18, 24 months, what's one reason for optimism as you look at the Nigerian pensions industry, and one reason for caution or concern?
I think the first is investment returns. I think there's a realization now that returns, have to be real, positive in real terms, above inflation. So one worry for me is as people begin to chase returns, they begin to take risks that they don't understand and not able to manage. So I will caution that whilst we are very interested in allocating to private equity, to alternatives, we need to seek out the best managers in these sectors. We need to seek out the best investments, and we need to allocate to people that can actually make this investment and return capital. And we also should invest in talent. We need more investment savvy professionals in the industry because once you go outside the safe remit of government bonds, you begin to take risk, and the risk it manifests many years later. The investment you make today, you think is all going well, in 5 years or 10 years can turn out to be bad and may be detrimental to the sector. And I think the final thing is that I think that we need stronger players in the market. We need, more consolidation. We need PFAs that have 1 billion, 2 billion AUM in the market, because these PFAs are able to invest in talent, they're able to invest in systems, they're able to invest in all the infrastructure required to deliver superior service to their contributors. Yeah.